we need more capacity, but then the industry also needs to up its game in terms of the quality it produces. That's what didn't happen the last time there was a lithium boom. You didn't have significant EV penetration, and you didn't have the kind of energy around moving to electric transportation that you do right now. The big money is at least taking a look, but it also took a look in 2016 and 2017, and for the most part passed. We were a less than $1 billion global industry in 2014. And it does take time to grow up.
Welcome viewers catching up on our investment ideas ahead of our Mining in America's content. I'm very pleased to be speaking with one of the lithium industry's most respected commentators and analysts, Joe Lowry, who is CEO and founder of Global Lithium. And he also runs the Global Lithium Podcast. Of course, do check that out on podcast platforms as well. We're going to be dispelling some of the myths in the lithium space and getting an idea of actually what's happening in the markets today. It's a hot point for lithium for sure. So Joe, fantastic to be speaking with you.
Thanks for having me.
Just starting with some market projections around supply and demand. You've always been quite outspoken around the idea of xEV penetration, not necessarily meeting the targets the government set for 2030, for instance. Just how big is the task at hand for the lithium industry to reach this sort of 50% xEV penetration that we hear battered around from Europe to the US?
Well, 50% EV penetration is not going to happen in the next 10 years for sure. And that isn't because I don't believe, I think the hockey stick on EV demand has started. I think that's clear, whether you're talking about China or Germany or, even the US is, we're starting to have rumblings of more than just Tesla. But the fact of the matter is, if you take a meaningful battery size for this 50% EV penetration and work out the math, take a 60 kilowatt hour battery, multiply it by lithium intensity, and then see what position the lithium industry is in to supply that. It's not going to happen anytime soon because it takes so long to bring lithium projects on, and lithium has been underinvested for the past several years.
Yep, absolutely. We'll come on to the underinvestment challenge in a minute, but I wanted to also ask why you think that maybe data providers, OEMs, governments are not aligned on the EV sales penetration rates. Is it simply a lack of understanding around the resource in the ground or the extraction process? What's your view?
I think, honestly, with respect to lithium, lithium isn't thought of that much. It's assumed. I think governments, bureaucrats are not well known for being mining savvy, shall we say. Mm-hmm. And this lithium isn't mining, though. Mining can be a component of a lithium project. But lithium's right now a specialty chemical business. And if you look at the history of lithium demand, if you go back to 2015, lithium battery demand was well under 50% of the overall market. It's around, in 2020, it was around 65%. Numbers vary, but they cluster around 65%. And we're going to 85%. Probably by 2025. And the other dirty little secret of the lithium industry is most of the product, most of the capacity wasn't designed originally for battery quality. So the natural production might have been from the standard brine operations, might have been 60% could be used in a battery. And that was in an era when specs were much easier to pass than they are today. So you have a couple of challenges here. One is that we need more capacity, but then the industry also needs to up its game in terms of the quality it produces. And you've seen SQM struggle. You've seen Orocobre never produce 50% of their material that could be used in a battery. Those are ancillary challenges that if you're an OEM sitting in Germany or Korea or wherever, you tend not to think about that. You tend to tell your battery guy, hey, I need this many cells. And I think now some of the more savvy OEMs.
Right.
And certainly the battery makers are realizing that there's going to be a scramble for lithium. And you also have different entities, particularly in China, learning how to upgrade material that doesn't make the cut the first time.
Yeah. Yeah, it's very interesting. Thinking of that challenge and that lack of sort of cohesion and thinking around lithium, but also linking back to the battery, the shortage of battery grade lithium that you mentioned, and then thinking about how the cost of lithium battery packs has traditionally come down over the years, as does with technology, Moore's law. Are we going to see battery packs get more expensive? And is
well,
that
if you do the math, and excuse me for interrupting, but this is kind of it's been an ongoing question. Back in 2016, when spot prices of lithium pushed $30 a kg, and everybody said, "Oh, that'll kill the battery business." Well, if you go back and do the math, look at what percent of a battery pack is the cathode, and then look at what percent of the cathode is the cost of lithium. And lithium is not a big cost driver for a battery pack. And whether it's $10 a kilo or $30 a kilo, the cost of batteries is going to continue to decline based on scale, primarily. And so, it's a red herring to say that lithium's going to drive the cost of battery packs up. Yeah, there's going to be a very, very minor, if you have $30 lithium instead of $10 lithium, obviously that's going to be an impact. But if you look at a 100 kilowatt hour battery with perhaps 80 kg of LCE in there and go through the numbers, that's not going to be the deciding. Nobody's going to say, I'm not buying a Tesla because lithium prices went up.
Yeah.
Absolutely. And what you've seen with high lithium prices, I mean, look at the most recent auction Pilbara Minerals did for spodumene. Last year I did podcast with the CEO of Pilbara, and times were very, very tough. The spodumene prices were in the 300s.
Yeah.
Now it's totally changed, and it's totally changed because demand has taken off. And that's what didn't happen the last time there was a lithium boom. You didn't have significant EV penetration, and you didn't have the kind of energy around moving to electric transportation that you do right now, and will continue to have. And that in a nutshell is the problem.
Certainly the demand-led challenge. Okay, well, coming to the junior mining sector then, the market, sorry, as you mentioned, some miners there, they're typically constrained with capital. Equities markets seem to have opened up, whether it's a scattering of retail investors understanding mining a bit more now, or large institutions saying, hey, we need to be in lithium rather than just in bulk commodities. OEMs potentially looking upstream. What do you think the mining as a sector needs to do to continue to attract capital flows? Because clearly there's been underinvestment for so long.
Well, in what I do, I've talked to a lot of potential investors, and I can tell you in the last 18 months, there's been a lot more interest by significant balance sheets to invest in lithium. The issue for lithium has always been that the global market for lithium chemicals didn't reach $1 billion until 2015. Right. It's a tiny business, and even this year, it's going to be in the $4 billion range. Well, I shouldn't say that, because the way prices are going up, it may crest 5.5 or 6. But by any measure, lithium drives global markets, huge industries. But it's a tiny piece, and there's never been people ask me all the time, why don't the major oil companies invest in lithium? Exxon spills more oil in a year than the value of the lithium market. And I'm an owner of Exxon stock, so I'm not taking pot shots at Exxon. But I mean, that's kind of the way I framed it. It's obviously said in jest to an extent. Yeah. But the Rio Tintos, the big mining companies, lithium in the past had so many false starts with EVs, going back to the Nissan Leaf, and then Obama was going to have 1 million EVs on the road in his first term, things like that didn't happen. And now all of a sudden it is happening. And you just got an industry that for a few years is going to have to play catch up. Yep. And it's not going to be successful playing catch up for several years.
Certainly. And within the junior tier, are they all good projects? With these prices, they might look attractive for some of the people you're advising. How bifurcated is it?
Well, okay. You have a mining show.
Yes.
I'm a chemical guy more than a miner. But since I've been doing what I do now, what I have learned is there is more hype and more, baseless euphoria among junior mining companies. Mm-hmm. I would say there was SQM had an investor day a few years ago, and their CEO at the time said to me when I came in the room, Joe and I are probably the only two guys that know the 300 companies out there that have lithium in their name right now. Only 8 of them actually produce lithium.
Yeah.
In any volume, and things haven't changed that much. I mean, you've got to return to the hype cycle. Lithium was in favor in 16 and 17, fell out of favor, and now it's back with a vengeance. Given the pricing has gone crazy, and people were shocked that it happened during COVID.
Yeah.
I mean, who knew?
There's some of the challenge funding, though. The assets are there.
Well, the challenge is. Yeah. The challenge is absolutely funding challenges still exist. What I'm saying to you now is the big money is at least taking a look, but it also took a look in 2016 and 2017, and for the most part passed. Yeah. The car companies, though, will soon realize it. Look at the wait time now if you want to buy a Tesla.
Yep.
It's not weeks, it's months. And it's not just about chips. Chips have been a problem in this cycle. When that's over, lithium will be the limiting factor. And I don't want to, somebody has a podcast or a YouTube channel with that name, but I like the term. So I believe that through most of the rest of this decade, lithium is going to limit the growth of EVs. And that's not a negative statement on electrification. That's just a simple fact. I know you have big banks out there that say, "Oh, it's just a commodity," and look at what happened in 16 when the price went up. All this capacity came on in Australia. What's different this time? 2 things. One, there aren't 5 mines about to come on in Australia in the next 2 years. 2, those mines there's been some consolidation in Western Australia, and there's been you look at what MinRes's attitude is, Mineral Resources attitude is about how they manage their assets. Totally changed. So you have more discipline on the supply side. But in the 2 years in 16 and 17, the growth in those 2 years combined was much lower than it will be just this year. Right. Next year will be more. If you're going to go from 300,000 tons roughly of demand on an LCE base in 2020 and go to 1 million plus tons in 2025, it's simple math. You can list out the projects and the likelihood of them actually producing in the timeframes they've stated. And it is a train wreck about to happen.
Ouch. Let's look at the major lithium producers then. What's your take on how they're feeling right now, and then also maybe what their strategies are? I'm thinking about Ganfeng acquiring Bacanora. Is M&A a solution there?
Well, asking me about Ganfeng is like asking me about my family. I've known the 2 guys behind Ganfeng really since they started. Ganfeng's done the best job in the last 5 years. Look at their growth. Look at the buys they've done. They're kind of the underpinning of capacity adds right now. And the deal they did with Lithium Americas is the next big brine project to come on in Argentina. So I set Ganfeng aside as kind of the model for what the rest of the industry should have done. Take a company like Livent.
Yes.
They're still essentially sitting on the same capacity that they were when I left. When I walked out the door 9 years ago this month, they really haven't done anything other than they've added hydroxide capacity that they didn't have a resource to supply. So they became more dependent on the market. And that's not what you need out of major lithium companies. Obviously, Albemarle has two of the best assets in the world with their brine on the Atacama and Greenbushes. But Albemarle has struggled mightily. They had to buy hydroxide capacity because they had such a struggle making hydroxide themselves. They bought hydroxide capacity in China. Right. A company that has great assets, it's hard to bet against. So I think Albemarle is bureaucratic and is disingenuous as they may be about how they talk about their business. You still have to like Albemarle's position in the next several years. SQM has kicked the can down the road. I mean, they have increased their capacity and they will continue to increase their capacity. In full disclosure, I am a happy SQM shareholder, but they have never met their targets for expansion. And you just go back and read their forecast of what their capacity would be from 7 or 8 years ago. Just keep moving it forward. The number keeps moving down the line. So that's another one of the big failures. I mean, if you take the top 4 lithium companies, Albemarle, SQM, Tianqi, and Ganfeng, they have about 70% of the supply. And if you look at the growth that's coming and look at their track records, the only track record you like in terms of expanding is Ganfeng. So let's hope the other 3 guys do better. I mean, look at Tianqi and Kwinana. Go look at the original YouTube video that they put out 4 years ago. It said, we'll be online at the end of 2018, I believe it was, and they're still not producing commercial product yet. So the industry, even the majors in the industry, have kind of an accounting to do for their performance.
Absolutely. Interesting. I just wanted to get your views on the geothermal lithium projects coming through before talking about some battery chemistry, if we still have time. But there's been some geothermal lithium projects coming through that have raised capital very quickly, I'd say, in relation to some of their junior peers. The low carbon credentials of the process seems to be attracting funds. What's your take on this technology? Do you think it's easily scalable, easily workable, unproven? I
will tell you unequivocally, it's not easily scalable. Look at the history of trying to do lithium from geothermal in the Salton Sea, and I was involved with Simple back in the day when Tesla tried to acquire it.
Right.
So there are a lot of challenges. The credentials on a whiteboard are unassailable. You're producing clean energy, you're taking the stream and then further adding value. And then you say, oh, we're just going to do DLE. Well, the dirty little secret is nobody's doing DLE in that way commercially and never has yet. So if it happens, it would be great. But I think you have a lot of unsophisticated investors. I mean, we're not talking about the big money that's chasing the geothermal hype juniors. Yep. So again, I just finished editing a podcast I'm putting out, and we talk significantly about DLE. And the other thing about DLE is it uses more fresh water than pond. In the whole water system, if you count the brine, yes, ponds utilize more, and DLE requires less brine because of the way the system works. But when you're talking about on average, if you look at DLE plans, they need a significant amount of fresh water. So all I say is, let's see a DLE from geothermal be successful. And I'll be extremely happy because that will unlock a great amount of supply. But I'm not holding my breath.
Yeah. Interesting. Excellent. Okay. Just want to quickly touch on battery chemistry if we have a moment of time. What's your view on sort of rival technologies like sodium ion coming out? Obviously, lithium ion's priced in, the technology's there, we're using it. But do you think that anything's going to be a sort of threat to the amount of lithium needed in the battery mix? Or maybe it's a case that you can't procure enough lithium, so you switch.
I don't think a switch to sodium. I mean, we'll see how CATL does with kind of a hybrid battery pack and some of the things that have been said, but that's going to be difficult to implement on numerous fronts. That I don't want to turn this into a technology treatise on sodium batteries versus lithium batteries, but the information that I have and the technical people that I trust all kind of indicate that, again, whiteboards are great for planning the future, but the devil's in the details. The other thing I think is that, even people that talk about hydrogen, it's a competitive technology. We'll see what happens. But even with hydrogen transportation, you still need a lithium battery, just not as big. So I don't see lithium unless there's a new element discovered that has a better energy density characteristic than lithium in the near term. And when you look at all the capital that's going to be deployed in mega factories, you're going to have an issue where people aren't going to just jump to the next thing once all that capital's and things are working. Because what's going to happen as this thing plays out over the next 10 years is lithium is going to be, for a time, a limiting factor. But there's plenty of lithium in the ground. There is no shortage of lithium in the Earth's crust. There was a shortage of investment that is just going to negatively impact the industry. But when you look at cathode technology, the real question becomes, 2 years ago, most of the industry was all nickel, high nickel, that's the future. Well, I didn't believe it then. I believed it would grow faster than LFP at the time, but I always said that there would be balance. And most of the people in the world that want an EV don't make 300 or 400 grand a year. And most families don't need a Tesla Model S. So you have if you want to make EVs mainstream, then you have to have the $25,000 car, pick your currency. Yeah. And that is much, much more likely in LFP battery pack. So I think when you look at the cathode challenges, it also has lithium implications because it goes to which chemical you make. The more savvy converters in China try to build their plants so it's not that hard to switch back and forth. But again, that's just another issue. But I'll tell you what, the big issue people aren't talking about. People love to talk about recycling. And the EU would like to say, we're going to mandate recycling. Well, recycling isn't going to have a major impact on lithium supply until the third million tons. And to put that in context, the first million tons took almost 7 decades. The first million tons of demand, 2025, will have been almost 7 decades of a commercial lithium business. The second million tons will take less than 5 years. So, people always fixate on getting to the million tons. Well, if the second million tons come in less than 5 years, who's planning for that? And the problem with recycling, as you build these mega factories, in the first 6 months of operation, they have a very high reject rate. So the recycling is actually going to be used in the early days to reprocess lithium-based cathodes that never got to market on time in the first place. So this mega factory build out and the recycling involved with it actually is another way that the lithium molecule is slowed in getting to a functioning EV. And that's another problem that people aren't talking about. But if you just look at logic, that's something you can draw on the whiteboard and actually be right.
Yeah, certainly. It's interesting. A lot of the things that you touch on there. Do you think LFP then is going to be the scalable, the mass market scalable?
I think, well, I don't want to call just,
Without predicting.
I don't want to make the same mistake on LFP that the other people made on high nickel.
Sure.
I think it's economics, it's a balance. And, there's several varieties of nickel chemistry. So I'm not calling, all I'm saying is there will be a relative balance between hydroxide-based cathode chemistries and carbonate-based cathode chemistries. That's my point. I mean, even had some of the big players now have recanted, who were saying 2 years ago that by 2024 will be the crossover and hydroxide will then be the dominant lithium chemical. And nobody that has a clue is saying that right now.
Yep. Fascinating.
It's not hard to get me to speak my mind on the topic, as I think you've probably ascertained by this point. But you're not always right. But I think I'm happy to stand on my track record. Got a lot of published work out there, and I've made some mistakes, but generally speaking, I've gotten it right more times than I haven't, and that's all you can do is take your best shot and hope you're right.
Absolutely. That's why I wanted to speak with you, Joe, and get some straight talking around what's going on. A last point I wanted to mention, and we sort of touched on it, but it's really around this idea of capital flows coming into the sector now, not just because of people saying, hey, we want electric vehicles, but the ESG mindset as well. If we're going to green the world and decarbonize, people have got to get on board with this. The investors you're talking with and the funds that you're seeing, is it genuine? Is it short-lived? Is it really here for the long term? Do they believe in the projects and want to sort of take them into production?
I think the narrative on ESG is great, but I also think it's immature. And I think there's a lot of academic assumptions made that aren't necessarily correct at this point. So I think 5 years from now, if we had this discussion, there'll be an ESG model that will have merit. But some of the ESG scoring you see, this is a lot of, hey, investment companies want to have ESG funds, but I would suggest that you go back and listen to the guy who left BlackRock, who was over in charge of ESG and then said, hey, this is a load of hooey now. That's not an exact quote, but essentially that's what he said. And I think it will mature. But I think when you look at right now, ESG is like mother God home and apple pie. You just, don't say, you can't say anything negative about ESG or, you're going to be deplatformed. So.
Yeah.
Don't put this on YouTube.
It's certainly an evolving landscape.
And that's right. And I believe it will evolve. It's just what happens is you get narratives out there and people don't allow for the fact that it takes time for things to mature. And that's what's happening in the lithium industry right now. I mean, we were a less than $1 billion global industry in 2014. And it does take time to grow up.
Indeed. Excellent. Well, that covers everything that I wanted to race through in our limited time. Joe, thank you very much for speaking with me and for addressing viewers of Assay TV. So it's been really great getting your insights, and hopefully we can speak again sometime.
Thanks a lot.